everyone around me is making money in the stock market. I think I should start investing too. What's going on, guys? Gilman back with another video. Live well, live wealthy. Today we have a video on the wealth side of things. And if that sounded like you, I have a perfect video to tell you about some things you need to know before you get involved in the stock market. The first thing we're going to go over is what is the difference between trading and investing. With the start of the COVID pandemic, as more people have started to stay at home, we've seen a large number of people enter the stock market. And with that, there are some key things that you need to know. The first one being, what's the difference between investing and trading? So let's take a look at trading. There are two types of trading. The first one being day trading, which is essentially you buying and closing out of a position on the same day. So it'd be like buying American Airlines today at $12.50 and then selling it at the end of the day at $12.75, right? It could go both ways. The stock could drop, the stock could rise, but the goal of day trading is to be in and out of positions the same day. Another way of trading is called swing trading, and swing trading is buying a stock today, hoping that it'll go up a day, 2 days, 3 days, a week, a month, any short-term period from now, right? So let's say you think American Airlines today is trading at $12.50, but you think, it's actually going to go up to $14, right? You don't know exactly when that's going to happen. You don't know if that'll take a day, a week, a month, but eventually it'll make its way over there. And so you invest in the stock today with the hope of selling it when it reaches 14. Again, I'm not saying American Airlines is about to go up. I'm just using that as an example. On the other hand, when we take a look at investing, that's something that you're looking at for the long term, right? So that could be anything you set for yourself. It could be, 10 years from now, you want to buy a house. Maybe you're investing for retirement. Maybe you're investing for another big goal of yours, right? The point of investing is not to sell the truck. It's kind of like a buy and hold mentality, right? So let's say you see a company like Amazon, Google, Apple, Facebook. You see these companies that you think are going to go up not only a couple months from now, but maybe a few years from now, a decade from now, more than a decade from now. And so those are the companies that you would try to invest in for investment purposes. So that's kind of the difference between trading and investing. Trading is more short-term and you're more active, whereas investing, you're just going to buy it and hold it, and you don't care if the stock goes from 15 to 18 to 17 to 20. You're just hoping that in the long term it'll be higher than $15. The second thing you need to know after you've figured out whether I want to day trade or whether I want to invest is the type of broker you will use. So as you know, there's a bunch of options out there. There's TD Ameritrade, there's Charles Schwab, there's E-Trade, which are sort of the more established ones, and then we have some new players in the market such as Robinhood, which a lot of people have heard of, and Webull. There's Tastyworks. There's a bunch of them, right? And each of these has sort of an advantage and a disadvantage, and that's more for you to see. It really depends on what it is that you want to do and what you want to trade. So for example, a good thing about Robinhood is that everything's free. Stocks buying and selling is free. Options buying and selling is free. On the other hand, recently there have been instances where a lot of users of Robinhood were not allowed to close out their positions, and this has happened a couple times in the past few months, so that's something to be careful of. If you can't exit your position and the stock's going down, that can really hurt you. The more established players like Charles Schwab, TD Ameritrade, and E-Trade are great as well, but again, you have to look at kind of what you're willing to trade, right? So if you want to trade options in Charles Schwab and TD Ameritrade, it's 65 cents per contract. If you want to trade over-the-counter stocks, which are generally cheaper penny stocks that don't trade on any of the major exchanges like NASDAQ, Amex, NYSE, those over-the-counter ones, you can typically not even buy on Robinhood and Webull. You can buy them on Schwab and TD Ameritrade and E-Trade. TD Ameritrade does charge you a $6.99 or $6.95, one of those two commission fees, whereas Charles Schwab, it's free. So again, it kind of depends on what it is that you want to focus on, what it is that you want to trade, and then also the interface, right? So the reason a lot of people prefer Robinhood is it's really easy to use. You pull out your phone, you type in, AAL, you look at the price, you hit trade, you swipe up, and boom, you have the stock. Whereas the other ones are a bit more, there's a couple more steps involved in the process of purchasing a stock. So that's that. And the last thing that I want to cover is the difference between a cash account and margin account. So cash account is pretty much what it sounds like, right? It's you putting money in, you're using that money to buy the stocks that you want. For example, you open a cash account with TD Ameritrade for $1,000. you now have $1,000 to buy and sell securities. So a downside to having a cash account is the settlement time. So let's say with that $1,000 account, today's Monday, you sell a security for $500. That money that you sold on Monday is not going to be available for T plus 2 days, right? So if you sell a security on Monday, that money is available for use again on Wednesday. A good way to sort of deal with this is to divide your account kind of into, not necessarily, actually dividing it, but just in your mind. Let's say you have $1,000, you trade 500 on Monday, you trade 500 on Tuesday. That way your Monday's $500 is available again on Wednesday, and your Tuesday money is available on Thursday, and you can keep cycling that by using half of it in any given day. So that's with a cash account. The other type of account is a margin account. And what the margin account lets you do is sort of two things. One, it lets you buy more than $1,000 worth of stocks. So let's say you put $1,000 in, you can now buy, whatever your stock buying power is. So let's say you can buy $2,000 worth of stock, which can be good and it can be bad. It can be good for someone who, is really bullish on a stock and they expect it to go up. Now, instead of only buying $1,000 worth of shares, you could buy $2,000 worth of that share. However, in using a margin account, you are subjected to the pattern day trade rule, the PDT rule. And what that means is you cannot make more than 3 round trips every 5 days. What is a round trip, you ask? So let's say I were to, again, we're going to go back to American Airlines because it's a really hot stock right now, very volatile. You buy American Airlines on Monday, you sell it on Monday, that's 1 round trip, right? Buying and selling on the same day. If you were to do that on Tuesday, again on Wednesday, you cannot do that a 4th time on Thursday, right? You have to wait for that initial Monday one to clear the following week before you could do that. So in any 5-day period, you cannot do more than 3. Upon your 4th, you will get flagged as a pattern day trader. And that means from that point on, in your margin account, you will need $25,000 in either securities or cash. The combination of those two needs to be $25,000. Otherwise, you're not going to be able to day trade, right? So that's something to keep in mind. If you are going into a position, make sure that, you have that day trade available to use. The worst feeling in the world is knowing you're up a great amount on a stock, but not actually being able to cash in on that. About a margin account is the moment you sell your security, you have that money available to use again, right? So we just talked about with the cash account, how you had to wait, if you sold it on Monday, T plus 2 wouldn't be available till Wednesday. Well, with this, if you sell it on Monday, you can buy using that money again on Monday. Again, keeping the pattern day trade rule in mind. The other thing about a margin account that can be good or bad depending on how you use it is we talked about having the ability to buy more than $1,000 worth of shares, right? So you put in $1,000, a margin account allows you to buy more than $1,000, which can be good if it works out for you, right? So you're bullish on a stock, you buy a stock and you buy $2,000 worth of the stock because that's what your stock buying power is, right? That's determined by your broker. And depends on the stock you pick, right? So some stocks have more buying power than others, depending on how volatile they are, and a lot of other things that we shouldn't get into right now. But anyway, point being, right? You can make a lot more money by investing $2,000 in a stock rather than investing $1,000 in a stock, right? But on the other hand, if that stock does not go the way you want it to, you're also kind of on the hook for more than just the money that you put in. Now, a lot of the times you're not gonna, the stock isn't gonna go to zero, and you're not gonna end up owing your brokerage $1,000 because you've lost both your $1,000 and the $1,000 that the brokerage just lended you, right? They'll do what's called a margin call before that. They'll kind of either ask you to put more money in or sell the shares you have currently because your stock isn't performing too well. That's also something to keep in mind is, yes, you have more opportunity, but with that, you definitely have a lot more responsibility as well. So that's all I had for you today. We really hope you were able to learn something today that you didn't before, and you're one step closer to starting your journey in the stock market, whether that's as an active trader or as a long-term investor. So I am going to be making another video on the basics of sort of day trading and what to keep in mind as you're trading. This video serves more of a purpose of getting you introduced to the concept of trading, but if you do decide to take that next step, I will be making a video talking about kind of some things you need to know as you sort of start that journey and actually start trading. So with that, that's all I had for you today. Really hope you learned a lot. Let's hope to be a bit better every single day, and until next time.